Hello, everyone. Good day, and thank you for joining us today. Welcome to the launch of the ASEAN Digital Generation Report for 2022. This is the sixth in a series of annual reports that the World Economic Forum have jointly produced with the Singapore-based consumer internet company, Sea Limited. And this year's edition is titled Digital Financial Inclusion. It's being launched today in collaboration with Astro, AWANI News Network based here in Malaysia. My name is Melisa Idris. I'm an assistant vice president and senior editor here at Astro AWANI, and I will be moderating this event today. Allow me to run very quickly what to expect over the next 1 hour. First, we will hear from Santitan Satiwatai. He's the Group Chief Economist at Sea Limited. He will be sharing some of the key observations from the 2022 ASEAN Digital Generation Survey. And then after that, we will have a panel discussion with representatives from both the public and private sector to delve deeper into the opportunities and the obstacles to deepening digital financial inclusion in ASEAN. So there will be lots to discuss. You'd want to stay for the whole hour, but to kick things off proper, I'd like to invite Mr. Juok Lee, member of the Executive Committee for the World Economic Forum, to tell us a little bit more about the background of this survey and some of its objectives. Juok, over to you.
Thank you very much, Melissa. Good afternoon to all of our viewers who have dialed in, to our distinguished panelists. Thank you for joining us, but also especially a huge thank you to Astro AWANI for hosting this important launch event. As Melissa, you've shared, this is an ongoing series of efforts from the World Economic Forum side to have a pulse on the region's exciting digital economy. And we've been privileged to work together with Sea Limited for this very important endeavor. I'm actually based here in Switzerland, and as someone who both represents the forum in the region, but also at the same time advocates for the region inside the forum and on the forum's global platform, the last month or the last year has been a very exciting year for the region. ASEAN has really been at the center of global attention. You have probably seen in the news all the global leaders gathering in Phnom Penh for the ASEAN and related summits, in Bali, of course, for the B20 and G20 summits, and last but not least, also in Bangkok for the APEC Economic Leaders Summit. The world is also watching ASEAN, not just because of these important summits, but also because of the huge economic potential that the region holds, especially in the evolving geostrategic landscape that we see today. I think ASEAN has potential to grow even further. And one of the key drivers of this growth, of course, is the digital economy for the region, which has grown exponentially even throughout COVID. And as we're sort of seeing the end of the pandemic, we are hoping that this digital economy growth will further propel the region's prosperity going forward. However, there are some challenges and bottlenecks as we see it, and this is one of the reasons why for this annual edition of the report that we jointly published together with Sea, we've decided to look further into the field of digital inclusion. And the distinguished panel, who I would say the only downside that we have is the lack of gender diversity, but we do have a powerhouse of voices, both representing public and private sector. They will dive deeper into what are the real opportunities, but also challenges that lie ahead for the region to really fully leverage the digital economy growth. So from here in the World Economic Forum, we thank you for your attention, for all your efforts. We will continue to work together with our partners in the region to make sure that the findings from this report are taken up by the different governments, by the different policymakers, and also key businesses so that we can really reap the benefits of this phenomenon. So over to you again, Melissa.
All right, wonderful. Thank you, Juok, for that. Again, I'd like to invite Santitan Satiwatai, Group Chief Economist at Sea, to share some of the observations from the 2022 ASEAN Digital Generation Survey. Santi, over to you.
Thank you so much, Melissa, and thank you, Joe, for that introduction. And thank you, the panelists, for joining us again, giving us your insights today as well. A great privilege to be here, and also greetings to everyone tuning in from home. I would like to start by sharing my screen, and we've been very grateful to have this ongoing collaboration with the World Economic Forum now entering its 6th year. And as Jurok has mentioned, this year, the focus of our report is on understanding financial inclusion for the digital generation in Southeast Asia. And the reason we picked this topic is not only because we think that financial sector has seen many exciting transformations, a huge increase in adoption technology in the past 2 years, but it's also because we believe that the access to finance is going to be ever more important in a year where there are macroeconomic uncertainty and challenges like rising inflation, rising interest rates, and potential global economic slowdown next year. Being able to access financial service is going to be important more than ever during these kind of times. So that's why we're very grateful to have a very strong participation from the ASEAN digital generation this year. We got over 90,000 completed response across 6 ASEAN nations, which make this one of the biggest, if not the biggest, the ASEAN survey that we have seen or come across. In the past, we used to call our survey ASEAN Youth Survey because we used to focus only people below age of 35 years old. But then we realized that in the past 2 years that actually use of digital tools applications is no longer restricted to the digital natives. It's not only about the youth anymore. Actually, a much broader population are now utilizing these digital tools for their daily lives. So it's not fair to just focus on the youth. We want to expand, be more inclusive. So now we include, let's call it young at heart generation, above 35 years old as well. Of course, that's also include myself. So we have that in our sample as well. And we also include 27,000 entrepreneurs from the SME sectors, micro, small, medium scale enterprises, which of course form the backbone of the ASEAN economy. So give us a perspective from the business side as well. And even though we lack a little bit of diversity on the panel side, in our survey, female is very well represented at 52%. So without further ado, I would like to talk and share with you 8 key findings coming out of this survey this year. The first one is that the wheel of digitalization has really turned for financial service in the region. What I mean by that is that when we ask population respondents across 6 ASEAN nations, what are the most popular digital applications they use? Of course, number 1 is social media, and it has always been like that for many years. But the surprise this year is that the number 2 and number 3 are the digital finance applications, whether it's mobile banking or it's e-wallets. In fact, if you combine number 2 and number 3 together, that would even topple social media. And that has become really the predominant digital usage and really kind of speak volumes to how much acceleration we have seen in digital options like payments across to other financial service. And this is important because once you start to get the taste of how the digital applications can help financial services, can help make your life easier, you become hooked. You understand the benefits and you're willing to learn more about it, spend more time understanding it. And that's exactly what we see here. We see positive momentum. When we ask the digital generations, 87% of them said that they want to see further digitalization of financial services. And this is not just payment. This is payment, this is buying insurance online, this is investment applications, this is digital lending across the board. So the momentum is going strong, and it's going to be a very sticky transformation going forward. And that's have massive implication for the whole economy, not just financial sector, because digitalization helps broaden the access to financial services, especially for the underserved groups. Take example of people who live in remote areas, the rural dwellers. In the past, they probably have to travel, commute into town, to cities, to physical branch, sometimes taking the whole day to do that with some transport costs as well. Now they can do everything or most things at a click of the button, whether it's on the computer or on mobile phones. And we see this evidence to support that with 50%, more than 50% of rural dwellers saying that actually predominantly they're using the financial service mainly through online channels. We also found that the adoption of digital financial applications is even higher among women than among men within Southeast Asia. Well, the MSMEs, the picture is slightly different, but it's about having better access to credit, which is crucial for expanding business, running business. We found that typically in the past, the MSMEs have this binding constraint they face where they don't have a collateral or assets to pledge for loans. So they find it difficult to access loans from the commercial banking sector. But what the fintech or the new economy players come in, they offer digital lending where they can use the alternative data. So maybe the MSME may have the online sales data, maybe they'll have the data on how they always pay their utility bills on time, what have you. These can be utilized to provide the creditworthiness, prove the creditworthiness, and get loans from the fintech companies. And you can see from this chart that for micro enterprises, they are relying on fintech almost the same amount as they're relying on commercial banks to get loans. But despite all these positive developments, the mission to improve financial inclusion is far from over. There's still a lot of gaps and constraints out there. We found that 79% of digital generation do not have access to the suite of key financial services like credit, insurance, and investment products. They may have one or two, but not all three. And when you look at a profile of those who are excluded, it's pretty much those three that we just talked about in a previous slide: women, rural dwellers, and micro enterprises. What this means is that, yes, technology has helped them have much better access to financial services, but it hasn't eliminated the gaps. The gaps are still there. More needs to be done in order to really bridge this gap. And once you double click and zoom in into some of these gaps, an even more interesting picture emerge. For example, when you ask people, okay, you have investments, you're utilizing investment services, but what do you invest in? This is the answer we got. It's not quite that people are investing in diversified portfolio of financial products and things like that. But actually the picture we get, the most popular place where they put in investment or money is in gold, 34%. Some people are investing in mutual funds and ETFs, that's about 13%, similar to crypto and NFTs actually, and not a lot higher than lottery, which is 9%, which you could arguable whether lottery is actually investment. If you look at people where they're getting their loans as well, they may say, I already received credits. But in fact, when you look deep into the number, only 25% actually getting their loans from commercial banks. The biggest proportion of loans, actually, most people are getting is from the informal side of finance, which is mostly family and friends, people they turn to in times of needs. And for some, they also have to turn to the local money lenders, the loan sharks, which may also charge them very high fees and very unfair contracts. So you can start to see all these gaps are still very much out there. And similar picture and similar findings we found when it comes to the business side of things as well. The MSMEs face similar constraints, and the two in particular that they mentioned to be the key issues they're struggling with. One is access to credits and loans, which we already talked about, but the other one is around international payments. For business, being able to import raw material products from abroad and be able to export and finding new sales, new markets is key. But international payments can act as a binding constraint. 42% of MSMEs say they face international payment issues, and that prevent them from exporting and importing. And the utilization of financial service is absolutely crucial for everyone, but particularly for small businesses. When we ask them what function of financial service serves in their daily operation, daily lives, these are the three key things. They need it for managing cash flow and expense, liquidity, working capital. They needed to expand their business locally and overseas. And last but not least, they also need financial service as a source of social safety net, meaning someone they can turn to in time of needs. When there are shocks, when there's a revenue drop, when the cost spike, they have to turn to financial service as someone who can provide them with a lifeline. So if they don't have access to financial service in a world of uncertainty, they can be very much at risk. So given that these gaps are really important and we really want to bridge this gap, we try to ask, why are there these gaps? What are the key pain points and barriers that prevent them from accessing financial services more? It comes up with three things. First is the concerns over safety and security. They worry about the safety of their money, being defrauded, being scammed, losing their money in system or even the data. Second is around the complexity of the current state of financial product and processes. They said require collateral, getting loans require collateral, require a lot of documentation. Some of the contracts they don't understand. They fear that there might be a lot of hidden fees. Process takes too long. So all of these things, about difficulties, are grouped in second group. And the third group is around the cost or the price, like high interest rates, high fees, or low returns from investments. So as you can see, quite interesting picture here that, of course, the issue of cost and pricing is there, but it's not number one. It's actually number three, after the safety concern and after about the complexity of financial products. And in fact, there's number four, which is not mentioned directly by the respondents. This is a hidden one, but it's around the importance of financial literacy. We also found doing this survey that those with better financial literacy, or those who have gone through financial management education, tend to have better access to financial services and tend to have better utilization of financial services. So when you compare two groups of people which are very similar in their profile and demographics, and one group has financial education, one doesn't, we found that the group that with financial education is much more likely to utilize a service like investment, like insurance, and to some extent, lending loans as well. So financial literacy can play a critical role in terms of unlocking access to financial service and better utilization. But how do we promote financial education? What's the right way to do this? What are the best ways to learn financial management? So instead of just coming up and thinking about it by ourselves, we asked the respondents as well, what are the best way to learn in your view? And these are the top 5 ways that they believe are useful, ideal way to learn financial management. I would like to highlight the first one because I think it tells us something very important. Learning by doing. Because this is pointing that learning finance is not about just taking tests or learning to just in class, in a classroom. It's about you have to get your hands dirty. You have to learn the practical way of doing finance, of doing investment, of understanding insurance and loans. You actually have to do learning and by doing at the same time. The second, that's by far the number one. The second one is learning family and friends, someone you can trust, someone you're close to. The third one is online videos and social media, which is increasingly popular, especially among younger generations. Then we don't just stop at asking them what are the best way to learn, but we also ask them, then if that's the ideal, what is the reality? What are you learning from? What are you doing currently? And we found that for the first 3, it generally match up quite well. These are also the key methods they are learning. And so, which is probably why they also recommend these 3 methods because they like it. But the gaps are in these last 2 options. So while very significant proportion of the respondents said they would like to learn from having proper training courses and from the financial advisors, financial experts, less than 10% of the population actually have access to these kind of learning. So this is a clear gap. And especially among women, they have even lower share of people who have access to these kind of modes of learning. So to kind of put things together in the last slide, what have we learned and what potential calls to action we can think about as coming together from both private sector and public sector altogether and different stakeholders? I think one thing is that we have learned that digitalization can play a very important role in improving financial inclusion. So we need further digitalization in finance. And I believe that actually, to our panelists on the panel today, both Indonesia, Malaysia, and other countries in ASEAN already heading in the right direction, promoting further digitalization. We have seen countries adopting a more open financial architecture, having fintech, digital banks, as well as the traditional banks playing alongside each other, driving digital transformation going forward. But we also need to make sure that we are operating in a safe online environment. So measures to strengthen data governance, cybersecurity is also important. And last but not least, I think one of the strongest conclusions from this report is that we need to upskill our people, both in terms of financial and digital literacy. In the age where financial services are becoming increasingly digital, I think there's a strong synergy between financial and digital literacy. You can learn the 2 things alongside each other so that we will help the digital generation not only have better access to financial services, but also can access these services more safely and with immunity. Thank you very much for your attention.
All right, Santi, thank you so much for giving us that overview of the survey results. I think let's extend the conversation now to a panel discussion so we can explore the relevant implications of those survey findings. I'm delighted to invite to the panel Mr. Iman Shah. He's the Deputy Commissioner of Otoritas Jasa Keuangan, OJK Institute and Digital Finance, Indonesia's Financial Services Authority.
Hi, Melisa.
Hi, hello. Welcome to the panel.
Thank you. Thank you.
Fabian Bigar is also on the panel. He's the CEO of My Digital in the Economic Planning Unit of the Prime Minister's Department here in Malaysia. And last but not least, Jeffrey C, CEO and co-founder of POCO. He's also a WEF Young Global Leader. Fabian, Jeffrey, Pak Iman Shah, welcome to the panel. And also Santi, we're going to get you to join the panel as well to extend the conversation on this survey. If I may begin on the aspect of digital financial inclusion, and Santi, I know you have been talking for 15 minutes straight, so I apologize for directing my first question to you. But since we have representatives from the governments of Malaysia and Indonesia on the panel today, I was wondering whether there were any highlights from the survey that was specific to Malaysia and Indonesia that were perhaps interesting to note.
Absolutely. Yeah, and thank you for that question. So I think maybe I'll split this into two parts. The first one, I think, where Malaysia and Indonesia really kind of stood out is the evidence that digitalization is helping to boost financial inclusion. While we see this regionally, in these two countries is very clear evidence. And let me give an example of that. So for example, starting with Malaysia, we talk about how women have higher adoption of digital finance apps than men. That's true in Malaysia, but the adoption in Malaysia among women is even higher than the regional average. So about 80% in Malaysia compared to only 65% in the region. We also have evidence found that the rural dwellers, people living in rural regions, are accessing finance via online means in Malaysia more than the region, higher than the regional average. So I think that's very clear evidence of inclusion through digital means in Malaysia. In Indonesia, fintech seems to play a very important role, and more significantly so than any other countries. We have found that Indonesia has highest share of people borrowing from fintech in the region, more than any other countries, and of course higher than the regional average. For the micro enterprises in Indonesia, in fact, we have a higher share of micro enterprises say they borrow from fintech than actually from commercial banks. So the role of fintech is very important there in promoting inclusion and access to credits in Indonesia. And maybe just leave you with some fun facts as well on a less serious note. We also find interesting like what people invest in. And in Indonesia, I think we found that gold is very popular. So people put money in gold higher than average. I'm sure.
I think starting in Indonesia only, Santi.
Will not be surprised to hear that, yes. And in Malaysia, the share of people investing in stocks and investing in ETFs and mutual funds is quite significantly higher than the regional average. It could be also the role of EPFs, which make it easier to invest in these kind of financial instruments. So I'll stop there.
Wonderful. Thank you, Santi, for the country-specific observations. Mr. Iman Shah, can I get you to respond to that? That's very interesting that Indonesia is borrowing far more from fintech compared to commercial banks. I mean, was this something that you noted during the pandemic, a broadening of access to financial services in Indonesia because of digitalization?
Well, thank you, Melisa, and thank you as well. I really appreciate for the invitations for OJK to join the discussions this afternoon. And I think, I think Santi has shared with us a very valid fact that within the pandemic era that we have the role of the fintechs in terms of how they are extending their loan to the SMEs is increasing. And I think that's one thing that's really like advantage coming from the fintech player, particularly for the P2P lendings in our case, because of this. If you compare Indonesia to other countries, we have this 70,000 island, and we had before we have like obstacles when we urge financial institutions to open branches, but by having digitalization, they can reach out more people to access their financial services. And I think that it is like an evidence for us as well. When we have right now about 102 P2P lending in our case, and they about already like what is it extend about like 8.2 billion rupiah with a very low level of NPL. So I think that's a good figure for ourselves. That new people more access to the fintechs, but having also because of this, maybe in terms of the interest rate, maybe what lower rather than the conventional bank. So then the level of NPL also from this fintech player is also quite low. So that's very interesting figures for our case, and I think in the future we are expecting that this role of the fintech player, in particular the P2P lending, is increasing even more higher. So I think yes, because of the pandemic, to some extent, people cannot go to the bank, conventional bank, and then the fintech player comes to the market, and then they're offering through digitalization these financial services, and no wonder that I think macro and medium small enterprises can access them and enjoy the financial services offered by this fintech player. On top of that, I think we are expecting as well now, the government will come up with the omnibus law on financial sector in the near term. So I think that really give us a stronger foundations in terms of the legal framework, how we are going forward for having also this fintechs players in the market. So I think that gives them more legal certainty, not only for the players but also for the debtors, for the SME as well, to enjoy further the financial service coming from the fintech player.
Yeah, that's very interesting, Mr. Iman Shah. I think we'll come back to the issue of safety and security and building that trust. I think regulation in place and having this omnibus law will provide that, that trust in consumers. And it's wonderful to hear that during the pandemic was an opportunity to further digitalization, but also because of Indonesia's vast geography and difference. So really a wonderful way to democratize and to increase financial inclusion, digital financial inclusion. If I may shift the focus from Indonesia to Malaysia, let's take a quick look at what the challenges are. Fabian, let's bring you into the conversation. Where do you see some of the challenges in not just broadening access to, but also deepening the digital financial inclusion for Malaysians?
Okay, thank you, Melisa. Maybe I'll just share a bit about the situation of financial inclusion in Malaysia. I think generally Malaysia has a relatively high level of financial inclusion, particularly in accessing and using financial services. If you look at it, physical financial access point, they are available at 95% of districts in Malaysia. As end of last year, 96% of the adults population have at least one active deposit account as at end 2021. In terms of digital financial inclusion, the digitalization of financial services intensified like anywhere else in early 2020 during the onset of the pandemic and has continued to accelerate. Based on what we can find in the Bank Negara report, in 2021, the usage of e-payment services recorded a high growth of 30.2% to about 7.2 billion transactions. This is almost double than what was recorded in the pre-pandemic period. Online banking services registered a 41.5% increase. Similarly, e-wallet transactions are increased by 74.4%. More merchants are accepting e-payments, like the total of merchants registration for Do It Now QR service increased by close to 60%, about 59.4%. From what I understand from Bank Negara, there was a third survey on the financial capability and inclusion demand side that was conducted last year. And some of the findings related to the state of digital financial literacy among Malaysians. Number one, we are, of course, fast adopting digitalization. It was evidenced just now in the presentation or report, mainly in use for in-store purchases, money transfers, and online purchases. However, despite that, the survey found that the level of digital financial literacy is low and very concerning. Some statistics, about a third of our respondents, 37%, are willing to share their passwords and PIN numbers with those that they know.
No, that's terrible.
That's what Bank Negara informed me. And this exposed users to the risk of online fraud and also being used as a mule account to facilitate fraud. And 62% of the respondents do not pay attention to the security of bank websites, when they visit to perform online transactions. This is misleading. It could mislead them to providing their credentials to scammers, Yeah. Okay. So those are the
right. Yes, continue.
those are the findings that we probably need to pay attention to.
Very much in line, Fabian, those findings with the digital generation report, the digital financial inclusion report. I'm going to delve deeper into some of those things, particularly literacy and security. But I do want to look at the issue of the use of digital payments, and that's very popular. We saw, as Santi mentioned, e-banking and e-wallets. If you combine those apps, it could potentially overtake social media. But when we talk about better access to financial services, it really isn't just about staying domestic. It's also, digital financial inclusion also means being able to tap into international markets, being able to buy or sell products to and from overseas, not just as a consumer, but as Santi mentioned, as micro, small, and medium enterprises. Let's bring Jeffrey into the conversation. Jeffrey, you work with merchants globally. I was wondering, what are some of the observations in terms of trends of cross-border payments that you've noted, particularly within emerging markets?
Yeah, thanks so much for that amazing question. I think, so we work a lot with Web3 game studios. So they use blockchain for settlement in Southeast Asia and Latin America on the cross-border payments issues. And I think what we saw in the last 2 years actually points to new markets that are being created, which is a big boon for entrepreneurs and creators coming from emerging markets. So traditionally, if I'm a game studio or any other merchant, I go to a big market because it's easy to solve for access through payments. But to do it in a number of small markets, as you see in Southeast Asia and Latin America, is very difficult because each market you have to figure out how to set up, the marketing, how you do payments in all these different markets. But I think the last 2 years, some of the studios we work with, we've seen like games like Axie Infinity. They pioneered this play to earn model, and 70% of the users are spread out across Southeast Asia and Latin America. And that is unprecedented because traditionally when I create a new company, I would say, hey, I want to maybe target Indonesia. I go to setup, I figure out payments, I figure out marketing, distribution. And now you have game studios that in the span of 1 year, they can say, hey, how do I reach users in 15 different countries across the world? And I think cross-border payments has just been a big enablement of this kind of new business models, and especially for developing countries that don't have the scale of US markets.
Interesting. Okay, so I think there are some lessons to be taken from that. Let's come to the issue of security and fraud. I mean, they are foundational requirements to the digital generation if we want to encourage adoption of financial services. How have, and let's pose this question to Mr. Iman Shah, how have the risks in the digital space evolved with the increased digitalization that we see, and how has Indonesia adapted to these threats? I'm wondering, you pointed to the omnibus law, but what other measures have been taken to encourage and to instill that online trust and security?
Well, again, thank you for the questions, Melisa. I think we conducted already a lot of initiatives in this regard. So I think from the perspective of preventing the young generations, how they understand the product from the digital platforms. So we have the initiative, what we call this digital financial literacy. So I think we are addressing a lot of students from several cities in Indonesia, and then we are having like seminars and discussions and helping like also the we have a system coming from the World Bank, and we developed like a package of these digital modules, digital literacy modules. It is including as well ebooks and also videos, interactive games. So I think we are opening like more interactive between ourselves as a curator as well as the students. And then why we are targeting students, because they are like a front line, and then they can educate more people to understand about this digital era, right? And then on the other side, I think when we have so we are having also like a very interactive with this active interaction with these fintech associations. So we have a lot of code of conduct actually. We are trying to build a innovative but responsible digital ecosystem. So they from our side, we want them to come up like a lot of code of conduct, covering like various of digital platforms. Let's say EQIC, innovative credit scoring. So they come up like code of conduct, and then this apply to all the members of these fintech associations. So that's I think what areas that what we explore to come up like a security. And I think the government as well already like issued the law on personal data protection. Then it's also something that we may utilize in the future for having also like a security for people using also digital platforms in their business. But anyway, is that some parts like initial initiative, right? But anyway, it is something that it's an ongoing works from ourselves and also from the industry, and also from the public as well.
Understood. Mr. Imansyah, may I ask you, are Indonesian consumers, the digital generation in Indonesia, are they concerned with issues around fraud and financial scams? Is that hindering the participation of many Indonesians to digital financial services?
We want to share one initiative, Melisa, and also other panelists, that we have like a survey, and the survey come up like a very good figure today, that is when we're talking about these financial inclusions in 2022, it is increased already from 76.2% to 85.10% in 2022. So the previous figure in 2019. And then the financial literacy is also have a similar outcomes. It is increasing from 38% in 2019 to up to almost 50% this year. So I think but that's not the like a guarantee that people really aware about this fraud, because I think from the media maybe you're aware as well that a lot of illegal platforms offering also illegal investment. It's a case for Indonesia. So I think I do believe that we have like so many things to do against in the future for
that's right. Well,
raising the understandings of people for these digital products.
Definitely, it's not just unique to Indonesia. I know, many countries have the same challenges, including Malaysia. Fabian, it was very disconcerting to hear that many Malaysians are willing to share their passwords and also not check the security of the financial platform that they're, doing transactions on. Let's talk a little bit about that, because the more this happens and the more you hear about it from your friends and your family, or you hear about it online and social media, it erodes trust in digital financial services. So how can Malaysia stem that erosion but also build it. What efforts are being done on that front?
Right. Okay. Thank you, Melisa. Yeah, we are digitally savvy, but we are not savvy in terms of cyber hygiene.
Not savvy enough.
Yeah. From what I understand, of course, Bank Negara has been the primary mover in this. They've been working with banks to ensure the security of online banking transactions, intensifying education and awareness efforts. In fact, there are 5 measures for the banks to tackle financial scams. For example, number 1, financial institutions are required to migrate from the traditional SMS one-time passwords to a more secure form of authentication for online activities. Financial institutions will need to further tighten fraud detection rules and triggers for blocking suspected scams transactions, and customers will be immediately alerted when such activity involving their accounts are detected. A cooling off period will be observed for first-time enrollment in online banking services and secure device, and customers will be restricted to 1 mobile or secure device for the authentication of online banking transaction. Financial institutions also will be required to set up dedicated hotlines to customers to report these kind of activities. And there's also the Financial Education Network, a multi-agency platform that looks at advancing financial education strategy that is measurable and outcome-driven to help customers build skills, capacity, and behaviors. And they have this, annual flagship event that's the Financial Literacy Month to enhance awareness and of consumers on key financial issues and to improve financial literacy among Malaysians. I think the last one was held probably about more than a month ago in October. With the theme financial well-being, go digital confidently. I think that it has been, quite a bit of show. Many seminars and workshops were conducted all around the country.
I'm really sensing a theme emerging from everyone's answers. Really, when it comes to encouraging true digital financial inclusion, a large part of that has to include financial literacy of users. I'm gonna direct the next question to Santi, if I may. Santi, I noticed in your presentation that you had listed in the survey results that security and safety concerns were among the top 3 barriers to accessing financial services. But there was also the second part, which was the complex language used in financial services and contracts. That's also a serious barrier. I thought that was quite interesting. Would you care to elaborate?
Yeah, no, absolutely. I think, there's another question which was not presented just now, which I think can shed some light on this too. So when we asked the respondents as well, how do you choose your financial service provider? What are the most important characteristics? The issues of trust and safety, again, come up really high. Number 1, I think, of course, it's almost like a restaurant, it's a sanitation factor. That you have to be clean. That's the first thing, non-negotiable. So, being able to trust and safety is very important. I think also important is to see is that the respondents also make distinction between the unregulated finance and regulated finance. So in countries, especially in Malaysia and in Indonesia, they're saying being regulated by the governments is very important features for them they look for, which I think highly correlate with the first point, which is about safety, the trust that it can provide, right? So I think that's very important. But also, as you said, Melisa, why that is a sanitation factor. It's necessary, but it's not necessarily sufficient in terms of when they're choosing financial service provider. Much like you choose restaurants, they have to be clean, but that doesn't mean it tastes good. And so the second part is very important, and it's usually evolved around ability to meet the needs of these customers. And oftentimes the pain points around financial services that the requirements to access any service is just very complex, very difficult, whether it's collateral requirement, documentation, application process, understanding contracts. A lot of people complain about potential hidden fees or unfair conduct because they don't really understand what they're signing up to. So I think the simplification of the products, which tend to happen alongside a lot of the digitalization as well, I think that helps make it access a lot easier and make it layman terms, very easy to understand, very transparent. All of those features are very important. And last but not least is around pricing as well. This tend to be an issue for those who already have decent access. Then they shift their complaints from access to pricing. and high interest rate, high fees become an issue. Of course, that's another area. So we have to have reasonable kind of fees, reasonable interest rates. Again, I think digitalization and greater opening up of open financial architecture, this can help bring down some of the costs to serve for customers as well. So I think it's all three buckets you can see here. It's about having sanitation factor and trust, but it's also about being able to meet the needs and doing it at reasonable prices.
Okay, wonderful. Jeffrey, when we talk a little bit about, we heard Fabian mention just now, sorry, not Fabian, it was Santi who delved into the findings of the survey specific to Indonesia, and the survey found that many Indonesians preferred investing in gold, Malaysians preferred stocks and ETFs and mutual funds. This is quite interesting to me because being part of digital financial inclusion also means not just payments and banking, but also advanced digital services, and this includes sophisticated investment products. What are your observations on this front when it comes to whether the digital generation will adopt more advanced digital financial services?
Yeah. So one thing that's quite interesting to me is I recently saw a report from Chainalysis about the global adoption for say crypto, and actually 4 out of the 10 highest adoption in the world is in Southeast Asia. So there's very, very high adoption and exposure to financial products in that area, for good or bad. We know it comes with a lot of risks. There's not a lot of consumer protections, but the truth is that a lot of young people in this region are getting exposed to investments, to financial products through the crypto sector. So during COVID-19, so I don't know about the rest of you. I think I'm a bit kind of late to the game for investing. I've made my first investment when I was in university. But during COVID-19, I was talking to high school students in Vietnam who were trying to sell me digital land on this platform called Decentraland, which came out of built by an Argentinian team. And for me, it was just mind-boggling. I wasn't exposed to financial products until a much later stage in my life. So I think one thing that for me is really fascinating, I think, is seeing in this part of the world, in Southeast Asia, how people are kind of getting that very early exposure, are learning and experimenting through this kind of assets, kind of through Web3 gaming sector. Which I think is kind of very unusual and very different from how I grew up and how I was introduced to financial products. And I think that's something that I think holds both great promise in terms of introducing financial literacy, but also obviously brings a lot of risk for people who don't understand what are these products they're actually dealing with.
Which it kind of brings it all back to the need to kind of have more literacy, more awareness, more education on this front, be it informally through your friends and your family, or as Santi mentioned, learning by doing, or more formal training through professionals in this space. We've got about 10 minutes left, and before we get to closing remarks, I thought the observation around women was quite interesting when Santi presented his findings of the survey. Can I get you, Santi, to delve a little bit deeper as to why the survey found that women were doing better or adopted more digital financial services, but perhaps still are underserved and part of the financially excluded? And I noted in the survey that women who need loans actually don't get or don't have less access to financial services compared to more men. What's behind those figures, Santi?
Yeah, it's a very interesting question, Melisa. I think it's also very, very interesting findings overall around women. I think the adoption side, is probably somewhat easier to explain. I think in a lot of the cases, sometimes I think not just for digital financial service actually, but a lot of digital adoption, we have found other findings in other papers before that women actually tend to be more the early movers and fast mover when it comes to technology adoptions, especially when it comes to technology which help improve their livelihoods, which kind of really use in their daily lives. So this is not just limited to payments and financial services, but it could also reflect some of the maybe culture in Southeast Asia, where women in household may be the one who buy things, and they also have high adoption of e-payments, of e-commerce, or food delivery and other apps. So these kind of digital use case fits naturally, very naturally with digital payments because it helps reduce frictions. So maybe that's why they discover some of these digital payments before others. So I think that's point number one, why the digital adoptions is high among women. About the access to other types of financial service and loans, this could reflect perhaps the kind of job types as well, which is different between men and women. I think when we look at we also asked what are kind of your current jobs, and I think there's one group which is homemakers, which majority of them are female. So in this group, of course, you don't have kind of your own income and statement. Therefore, it's going to be very difficult for you to go for banks, and ask for loans. You don't have income statement, you don't have salary slips and things like that. And therefore, it might be trickier for them to access this kind of more advanced financial services, whereas it's not too difficult for them to adopt e-payments because that's much simpler products. So that could partly explain the difference between the kind of more simple product like payments and the more advanced product like credits.
Yeah, that makes sense. That's actually quite interesting. I do feel very passionately about economic equality for women. So the survey, the findings of that, the gender difference was also very interesting to note. Fabian, I was wondering whether, as part of this conversation that we're having here today, we're hoping that the insights from the survey is adopted by government, by private sector, or all the stakeholders, because really it's an issue that cannot be solved by one stakeholder alone. For Malaysia and for the Malaysian government, how do you see public-private collaborations happening? Are there opportunities on this front that can leverage digitalization to improve the financial inclusion in the country?
Well, if you look at the blueprint, the Malaysia Digital Economy Blueprint, one of the priorities is to ensure to create an inclusive digital society, and by extension, of course, moving towards a cashless society, financial inclusion, that stuff. And at the same time, to ensure that the society embrace digitalization, to create that trust. And you need to be a secure and ethical digital environment. These two are the key policy thrusts under the blueprint. And in the blueprint also, we mentioned about working as one nation, not just the government, but the other non-governmental entities as well. And we have done this. In fact, C has been a partner through Shopee, in terms of trying to, get the MSMEs to embrace digitalization and onboard them into the e-commerce sector. So that is just one aspect. And we are also working with, of course, Bank Negara to push for greater, digital adoption among the traders and smallholders as well. So these are some of the examples. We have been working with the various private sector to sort of introduce this to the public as well.
That's wonderful to hear. I understand we only have a few minutes left, and I do want to, in the remaining time that we have, get your concluding thoughts, panelists. I mean, if I may begin with Mr. Iman Shah, I'm wondering, moving forward, how do you see your organization, OJK, improving access and capacity, I might add, for digital financial services, hoping to move towards a digital economy in ASEAN? What are your concluding remarks, sir?
I think a very quick answer for that, Melisa, is actually we are expecting how is the ecosystem for digital innovation will be addressed clearly in our omnibus law. Then I think based on that, we're going to have like more structure initiatives attached to the OJK going forward, what kind of policies that we can have to support this digitalization in the financial sector. On top of that, I think we're talking about as well, we want to have like more collaborations between the incumbent I'm talking about this the regional banks as well as the rural banks, small banks, and how they can also being part of these innovations. So I think we're having like try to connect between these fintech players and also regional development bank and also rural bank. So I think uh, on and all, I think we are expecting they also have like higher contributions to the financial inclusion at the end. So
Wonderful.
yeah, that's I think one like you said, we are expecting the omnibus law, and the second one we are still working with this how we are forming these collaborations between the incumbents and as well as the tech players.
Excellent.
Thank you. Back to you.
Thank you, Mr. Iman Shah. And Fabian, what are your concluding remarks as to improving an inclusive digital economy in ASEAN?
We have blueprints. We have all kinds of blueprints. It's now just implement.
Execution. That's right. We've got great plans. We just have to get the execution right. Okay. Thank you, Fabian, for that very short and sweet conclusion. Jeffrey, what about you as a fintech working on improving financial inclusion? What's the next few years going to look like? How do you see financial inclusion in digital financial services?
Yeah, I think for us, our mission is to kind of enable cross-border payments in a very seamless manner, easy to deploy manner for creators and game studios by leveraging both traditional and blockchain payment rails. So the idea is that, if I'm from Vietnam, I'm from Indonesia, I'm from anywhere in the world, I can sell and collect easily from my users across Southeast Asia and Latin America. And I think we're seeing, because it's a lot easier to do it today and it's getting easier in the future, there's a lot more interest in terms of these markets. We talk to game studios in the US, in UK, Korea, where traditionally they would have said, my first market is my home market, which is big. They are now saying, I want to come to Southeast Asia because now I can easily kind of scale up my users across these different markets. And I think that's super exciting. And I think it just kind of really puts ASEAN on the map.
Wonderful. Thank you, Jeffrey. Santi, any last words to wrap up the findings of your wonderful survey? Anything to add?
Thank you. I'll just end with, reiterating the key conclusion and takeaway call to action that for us, I think we're going to be focusing on driving digital and financial literacy together. We have done a lot in the digital literacy space in the past few years through Shopee University, upskilling MSMEs and the workforce, as Fabian has mentioned as well, Malaysia, and we're doing a lot in Indonesia as well. But I think next step, following the advice of this report, is to layer on top the modules around financial literacy education as well on top of that. Mm-hmm. And I think given our user base, it will be kind of very good platform to really focus on access to financial type education for the younger generation, because we think we have to start younger now, as well as women, Melisa, as you mentioned, I think is our core user base. So I think that's going to be a good opportunity to improve both digital financial literacy together.
Well, panelists, we've come to the end of our session today, and I'd like to say it's been an absolute pleasure to chat to you today. And thank you so much. What a wonderful platform to bring together all the different stakeholders to collaborate. Hopefully today we've advanced the conversation for more evidence-based policies in the region. Folks, if you'd like to watch this session again, you can catch a delayed telecast of this entire session tonight at 11 p.m. Malaysian time on astroawani.com. And with that, I'd like to bid you all goodbye. I'm Melisa Idris. Thank you so much for watching. Until we meet again, be well and stay safe. Good night.
Thank you, Melisa.
Thank you.
Thank you all.
Thank you.
Thank you.